The Federal Reserve staying cautious and holding interest rates steady amid growing economic uncertainty.
Labor market conditions are solid, and inflation has moved closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
The Fed stopped cutting interest rates back in January as signs pointed to inflation's descent stalling out and overall growth slowing, a troublesome combination. Complicating matters now, President Donald Trump's economic agenda, including the slashing of the federal workforce, shaking what's been a stable labor market, and his overhaul of trade policy, rattling consumers, businesses, and markets.
Confidence is very fragile. You can see it in the consumer sentiment surveys. You can see it among business people, investments they plan to make. They're all pulling back.
Among the administration's moves to ramp up pressure on America's biggest trading partners, a slate of tariffs, some already implemented and some looming on imported goods from key U.S. trade partners Canada, Mexico, and China. Economists warn the policies could push inflation higher and sink consumer spending, putting the economy at risk.
Recession is a loss of faith. We lose faith that we're going to be able to hold on to our job and businesses are going to be able to sell what they produce.
And force the Fed to course correct once again. In Washington, I'm Karen Kafa.